What's going on, money lovers? Welcome back. Today I want to talk a little bit about a company called Opendoor Technologies. Just went public via a merger with Chamath Palihapitiya's IPOB, and I think it's a very interesting company. There's a lot of opportunity here in a largely untapped market. So first I just play a little clip from Chamath speaking about the company. Then we're going to take a look at the investor presentation and some other noteworthy news.
Reality is that a lot of investors are really shut out from the growth that exists in Silicon Valley and tech businesses. But what I'm trying to do is really democratize that access, find these iconic businesses, help them get public, enable them to grow for long periods of time, and really help build a legacy business. Because if we as investors can be a part of that, then we can basically share in those gains as well.
So I started seriously following Chamath this year, and really like what he's trying to do here with this new method for taking companies public. IPOs in the traditional sense have always greatly benefited institutional investors who are able to get in early in private financing rounds, and by the time a stock goes public, look at Snowflake as a recent example, by the time us retail plebs are even allowed to buy the stock on the public market, it's run up 100, 200%. And then all the institutional investors who got in for half the initial offering price are sell out, they make the profits, and we're all left holding the bag. So I usually don't invest in IPOs because the game is rigged against you. You're starting off at a huge disadvantage. So I like what Chamath is trying to do here. I like the idea behind it. I think he's trying to make a fair, level playing field and give everyone an equal opportunity in the market. Back to the clip, and he's again talking about Opendoor, and then we're going to do some Opendoor analysis.
So the setup is that. And so what we did was we started to look across a whole bunch of industries. And one industry that jumped off the page was consumer real estate. And the reality is that in the last 20 years, but even specifically in the last 6 months, everything that could be bought and sold online has moved online except that. And real estate is interesting because this is a category that touches every single American. This is the pillar of the American dream. 68% of Americans own a home. 32% probably want to at some point. 5 million homes are sold every year. This is the largest undisrupted market in the US. It's $1.6 trillion. But despite that, it's completely fragmented, it's low convenience, it's low trust, it's low NPS, and a third of the people in the marketplace actually only do it part-time. And so this is where we found Opendoor. And what they have done is something really incredible. And we think that they are building what we love to call a virtuous cycle. So how does this work? You as a consumer can now go to opendoor.com, and within 24 hours, they will give you an all-cash offer for your home. And if you choose to sell within 3 days, you can sell your home. It's a really incredible experience, and so you can start to understand how they can build a really powerful competitive moat. Because the more offers that they're able to make, the more homes that they will buy and sell, which means the more markets they'll dominate, which means the more value-added services that they can automate online. For example, mortgages, title, escrow, all these things where you used to have hundreds of pages of documents they can streamline through a mobile app. It also allows them to work with banking partners to secure large pools of capital at cheaper and cheaper rates. They can pass all these savings on to you, and all of that drives more demand to the business. And there are 5 really important trends that I think people need to understand. The first is that coming out of the global financial crisis, we've seen a massive underbuilding of housing supply. This is creating large housing affordability issues in major cities, and people are moving. The second is that because of the tax situation in America, the federal government eliminating the state and local tax deduction, state budgets in peril, taxes are going up, people are moving. The third, because of coronavirus, you can now work from home. Many people can work from anywhere, so they are optimizing for quality of life and they're moving. The fourth, you have 75 million Americans, digitally native millennials, who want to do everything online. They're starting to have families, they're looking for homes, and now they're stepping into the housing market. And then fifth, and probably the biggest accelerant on all of this is, as of a few weeks ago, the Federal Reserve basically told us that they're going to keep interest rates effectively at zero for a very long time. And we think that's going to drive an enormous amount of home ownership and the velocity. So when you put these things together, there's a really important trend that's happening in America, which is that the huge populous states like New Jersey, New York, and California are stagnating and starting to lose people. And these younger, cheaper, more dynamic cities are gaining enormous share. And these are the markets where Opendoor has already launched and is achieving scale. And so this is a business that we think is now very much proven and ready for prime time. They have 70% of the market, so these guys are the dominant leader, almost 4.5 times bigger than their next competitor. Last year alone, they did $4.7 billion of revenue, and 2023, these guys will do almost $10 billion of revenue. If you take the playbook that they have and you just apply it to the markets in which they can expand in the US, at 4% share, this is a business that will do $50 billion of revenue, and it's a merger that really creates an opportunity for investors. We priced this deal at 1 times 2019 revenue, but it's also an opportunity for Opendoor to raise the money they need, fortify their balance sheet, and really create more value and scale. So the last thing I'll say is I want to take a step back and just remind folks of, the times that I've come on, I've really tried to find asymmetric upside opportunities and present them to you, Andrew and Joe, and the rest of the viewers. And I really believe in this business. This to me feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year. This is an enormous bet for me, and I think that Opendoor is going to build a huge, huge business.
Chamath has a pretty good track record, I would say. They've all turned out very well for investors, with the exception being maybe Virgin, which I think it's too early. It hasn't really had enough time to run. I'll admit that's a company that I'm not as familiar with, and I have been wanting to learn more about. I'll probably do an analysis of that in the future. But I think given a few more years, I'm sure you see Virgin shine like some of these others as well. All right, so moving on to the investor presentation here. Opendoor has a plethora of talent. Tom Willower, Chief Product Officer, was Chief Product Officer at Coursera, where he helped to scale the company from 1 million to 100 million in revenue. He also led product teams as Vice President of Product at Netflix, where he helped to expand the company's subscribership from 8 million US-only users to over 40 million globally. That's 5 times growth. So just imagine what he can bring to Opendoor. A lot of notable companies here: Square, Amazon, Airbnb, Uber. So they're currently in only 21 markets. They've served over 80,000 homeowners, and the revenue has been increasing tremendously year to year, and they have 4.4 times as many sales as their next largest competitor. As Chamath mentioned earlier, real estate remains the largest undisrupted market in the US. And I'm sure if you've ever sold a home, you know what a pain it can be. I've seen a lot of companies find success in all the other industries by just making things easier. Look at Amazon, look at things like Square, helping businesses to consolidate. Convenience is big, and I think this could be a major innovation. And if you just look at the process of, selling a home, this is what it looks like. 89% of buyers and sellers use an agent. Could end up spending around $30,000. Takes a long time. You could be up for months. 20% of deals fall through. It's a nightmare. So if you compare going through your traditional sale route versus using Opendoor, it beats the traditional route in every way. You could even close the sale in as fast as 3 days compared to an average of 87 days to close on the market. 3 days versus 3 months is a tremendous difference. So Opendoor, through their apps and technology, have an incredible algorithm that enables them to efficiently and quickly price homes. And as you can see here, they're looking for unique features upon the inspection that can add, value to the home, or if they find problems, those costs that, let's say, Opendoor will now need to pay to fix it, they can deduct from the sale price of the home. So it really just fast tracks the process. Opendoor is 12 times more efficient than a traditional agent. And now if we move on to their growth prospects, they have incredible opportunity here. The country as a whole remains largely untapped. There's so much room for growth here. Now they do have competitors, but Opendoor does seem to be the strongest candidate. But that being said, this doesn't have to be a winner-take-all market. The market is clearly big enough where you could have 4 or 5 of these companies coexisting, and there's more than enough home sales to go around. This is a vastly untapped market. Markets today, they're just scratching the surface. They have 2% market share. So if you take what Chamath said earlier, their current playbook takes them to $50 billion in revenue. They're still in the early stages of the digital transformation of real estate. See the trends of everything moving digital. You look at Amazon, they only make up 14% of retail. Uber, 4% of transportation. Opendoor is less than 1% of real estate sales right now. COVID-19 has accelerated shift in consumer behavior, which we know all about. So as you can see, they're growing very rapidly, and they're also improving on their profitability. So that's something that I'll definitely be keeping an eye on. If they can continue to keep growing while also scaling their profitability, even just a few percentage points. Take a quick look at their financials. In the last few years, the amount of homes that they are selling keeps going up over 100% a year. Obviously in 2020, lots of uncertainty, but moving forward, their projected growth rates are tremendous. Now their gross profit for 2020 sits at, let's just say, somewhere between 6 and 7%. It'll be interesting to see if they can continue to improve that. Massive market, less than 1% penetration. They're giving consumers a superior experience. They're a market leader with a low-cost platform that's 12 times more efficient. They've got a significant market opportunity, and they're also considering adding additional services that would further improve their profit margin. So this could be big as well. All right, so if you guys made it to the end here, let me know what you think. Are you a fan of Opendoor? Are you buying? Why or why not? 2020 was definitely the year of the SPAC, and I'm going to be keeping close tabs on the moves Chamath is making. I might end up just throwing a little money at each of the social capital acquisition companies. I know next is IPOC is merging with Clover Health. I'm very interested in that one as well. I'm going to do some more research, maybe get a video out on that soon. Let me know what you think in the comments below. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.